The stock market is buzzing with opportunities right now, and today we're diving into the Magnificent 8, the BATMMAAN stocks: Broadcom, Apple, Tesla, Microsoft, Meta, Amazon, Alphabet, and Nvidia. These giants aren't just shaping our economy, they're setting the stage for 2025's biggest market moves. Today, we'll break down what's happening with each stock, the risks they face, and what you should keep in mind as an investor. Let's start with Nvidia. Nvidia has been the poster child of AI growth, with its GPUs powering everything from data centers to self-driving cars. But here's what you might not know: Nvidia's dominance relies heavily on the demand for AI infrastructure. If we see a slowdown in AI adoption or competition from AMD's MI300 chips or Intel's upcoming offerings, Nvidia's growth could take a hit. Look at their forward price-to-earnings ratio. It's significantly above the industry average, so it's priced for perfection. For investors, the question is, can Nvidia continue to innovate faster than its competitors? Next, Tesla. Tesla's growth story is legendary, but the EV space is becoming crowded. Companies like BYD and traditional automakers such as GM and Ford are rapidly expanding their EV lineups. Tesla's advantage lies in its margins, thanks to vertical integration, but keep an eye on their energy storage business. This often overlooked segment could be a game changer in the renewable energy space. As an investor, monitor their production efficiency and global market share. Can Tesla maintain its dominance, or are we nearing peak Tesla? Meta Platforms has been pivoting hard. The metaverse hype has cooled, but their focus on AI tools and Reels is paying off. If TikTok faces regulatory hurdles in the US, Meta could see a surge in ad revenue. But here's a tip: watch their expenses. Meta's Reality Labs division is still burning cash, which could weigh on profits. As a long-term investor, it's worth considering whether Meta's AI and advertising edge can offset these losses. Apple. Apple's strength has always been its ecosystem, but its iPhone dependency is a double-edged sword. The AR glasses and health tech initiatives are exciting, but these are long-term plays. For the short term, look at Apple's service revenue. This is a growing, high-margin segment that could be the key to sustaining growth. If you're evaluating Apple, consider whether its innovation pipeline justifies its premium valuation. Microsoft is a powerhouse, but it's not without challenges. Azure, its cloud computing service, is a key driver, but growth has been slowing. Their partnership with OpenAI and integrations of AI into Office products like Copilot are big bets. As an investor, focus on their ability to scale AI offerings across enterprise customers. Also, watch out for their gaming division, which could become a sleeper hit with the recent Activision Blizzard acquisition. Amazon's story is about diversification. Yes, AWS is still the golden goose, but retail is making a comeback as inflation cools. Their push into logistics, healthcare, and even satellite internet with Project Kuiper adds layers to their growth potential. For investors, it's essential to consider Amazon's debt levels and cash flow trends. Are they deploying capital efficiently, or are we seeing signs of overextension? Alphabet, the parent company of Google, is at a crossroads. Their search dominance is under threat from Microsoft's Bing and OpenAI's ChatGPT. But Alphabet isn't sitting still. Their AI tool Bard is gaining traction, and YouTube remains a revenue powerhouse. Here's the key for investors: Alphabet has a history of monetizing products once they mature. Can they do the same with their AI initiatives? If you're holding this stock, keep a close eye on their operating margins and R&D spend. And finally, Broadcom. Broadcom is the quiet performer in this group. They're not flashy, but their chips are the backbone of cloud computing and AI infrastructure. With a forward P/E ratio below many of its peers, it's arguably one of the more reasonably valued names on this list. Watch their acquisition of VMware. It's a big bet on software, which could diversify their revenue streams and reduce dependency on hardware. So, where does this leave us as investors? The Magnificent 8 are market leaders, but that doesn't mean they're immune to risks. Always evaluate fundamentals, like revenue growth, debt levels, and margins, before diving in. Diversification is key, so while these giants might anchor your portfolio, consider complementing them with undervalued or emerging players in sectors like biotech, renewable energy, or fintech. Drop a comment below and share your thoughts. Which of these stocks do you think has the most upside potential? Or is there an underdog you're watching that deserves a spotlight? Don't forget to subscribe for more deep dive analysis into the world of stocks and market trends. Let's make 2025 your most profitable investing year yet. See you in the next video.